Optimizing your portfolio with S&P 500 growth and risk strategies.
There is a smarter way to evolve this portfolio that we're going to be talking about today. So stay with me throughout the video. I'm going to show you when the set it and forget it portfolio with the S&P 500 still does work, when it doesn't, and how to tilt that portfolio for really a better risk adjustment and of course some accelerated growth. Now let's start with the set it and forget it portfolio. This is in the context of the S&P 500. Now, if you're unfamiliar, the S&P 500 is the 500 largest companies within the United States, meaning that you have diversification, you're invested in a lot of different sectors. But with it being market weighted, there are some companies like Nvidia, when you look at Alphabet, when you look at Meta, that are very, very heavily weighted and they take up a bulk of the S&P 500. Now, over the past decades, buying and holding the S&P 500 has been a passive strategy. We have low income, broad diversification across a large amount of companies, US equities. We let compounding do the work, and that is the reason why I do hold the S&P 500 in my portfolio. Now, many investors have said it's going to be the core of any long-term portfolio. You set your allocation, you rebalance on an annual or semi-annual balance in the portfolio, and don't overreact when you hear noise in the market. If you're seeing it on social media, not really reacting, because we know over an extended amount of time, the S&P 500 grows roughly around 10%.